Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I am Arjun Patsati. And the Shriram Transport and Shriram City Union Finance and Shriram Capital merger will go through by September, according to the management. And what does this mean for the bondholders of Shriram Transport, Shriram City Union? Uh, Shriram Transport and City Union have have a good amount of investor holdings of bonds. These are very largely retail, high net worth and ultra high net worth investors, family offices. Uh, a bit less of institutional holding at the mutual fund level, but more of the insurance companies and the retail segment and non-institutional segment of the uh, investor base. So what does this merger hold? Just before that, do not forget to download our app, Quick Invest by INR Bonds, iOS and Android, to get the best bonds curated for you. Find out all about Shriram Transport bonds and Shriram City Union bonds with our own proprietary risk score. What are the investments? What are the levels offered in terms of yields and price and maturities? And what is the risk the investor is taking investing in these bonds? And if you are still comfortable, it's a straight to in-app investment process. Download the app now. And also do not forget to register for our webinar on the 27th of July, Wednesday at 4 p.m., where I'm going to talk about what bonds to avoid in this current market and economic environment. Register now. The registration link is given in the description below.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Back to bond bites in terms of Gsec yields, slightly up. The equity markets, Sensex and Nifty were higher as well. And the rupee held its levels and not falling below rupees 80 like it did on Friday. US Treasury yields are still below 3%. All talks are about the Fed meeting this week. Rate hikes and recession, that's what the talk is about. And but coming back to the merger of Shriram City Union Finance with and Shriram Capital with Shriram Transport, it will create a 1.5 trillion NBFC AUM. The whole entity will be in the business of commercial vehicles, which is still the largest portfolio, which is Shriram Transport itself is about 1.2 trillion of mostly commercial vehicle assets. And the others would include consumer loans, personal loans, gold loans, small enterprise loans, etc. So all these would help the would create a huge entity, which will be equivalent to Bajaj Finance in terms of size, but with a weaker credit profile. You have the NPAs at over 6%, gross NPAs, and the capital adequacy is at 23%, which is fair, which is reasonable enough. The bonds of Shriram Transport are trading at higher levels than Shriram City Union Finance. The 4-year bonds, 2026 bonds, are trading at closer to 9% and higher for Shriram Transport, and it's just around 8% or 8.5% for Shriram City Union Finance. So clearly, the market believes that Shriram City Union Finance is a better credit than Shriram Transport. So with a very large entity, bondholders of Shriram City Union Finance might see that their credit profile of the bond they are holding may come down, while those of Shriram Transport may feel that may see that the credit profile is better than the original. The merged entity bonds are likely to trail slightly higher because one is the Shriram Group itself is a very large issuer, continuous issuer of bonds. So they do have to pay higher premium prices to yields to issue bonds. Hence, it remains to be seen how the markets will take this and how their company can grow its business. But given its size, maybe it will become a too big to fail kind of an NBFC. But again, that remains to be seen how RBI will view this entity. Thank you very much for listening in. Do not forget to register for our webinar on 27th July on what bonds to avoid in this economic and market environment. Do not forget to subscribe to our YouTube channel if you've not done so already.